Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for the Precious Metals and Critical Minerals Conference. Our next presentation of the day is from Castile Resources. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Mark Hepburn, Executive Chairman of Castile Resources, which trades on the OTCQB venture market under the symbol CLRSF and on the ASX under the symbol CST. Welcome back, Mark.
Thanks very much, Greg, and hello to everyone out there today. Thank you very much for listening in. I'll make a start pretty quickly. My name's Mark Hepburn. I'm the Executive Chairman of Castile Resources. We've been going for about 5 years now, developing this project, and we're getting very close now to our bankable feasibility study, and I'd like to run you through where we are at the moment. We are going to be producing gold, copper, cobalt, bismuth, and a magnetite product. So we have 5 revenue streams. So it's a very rich ore body. So I'll take you through the disclaimers quickly. So we've got about 300 million shares on issue. Our share price as of today was around about 11 or 12 cents. So our market capitalisation in Australian dollars is about 33 million Australian dollars. We had about 3.2 million cash on hand as of September the 30th. Our project is located right in the middle of the Northern Territory. This is one of the richest copper gold fields in the world, and it has proven historically to be exactly that. And our deposit is no exception. So in this presentation, I'll talk to you about how we've got very high leverage to gold and copper price rises that everyone has seen and everyone's talking about. We have all reserves in our bankable feasibility study that we are speaking to financiers about now. We also have these fantastic byproducts, bismuth, which is a very hot topic at the moment, which I'll run through, and cobalt. Bear in mind, gold and copper are over 80% of our revenue in our bankable feasibility studies and also in our pre-feasibility study, which has been announced. Also, what I would like you to ask you to do once you've heard the presentation is take a look at the research report that has come from an independent third party that, although we're trading at 11 cents, has valued us today fully diluted, fully discounted at $1.37. So you can see there is a very serious value gap that we're talking about now. We have added a lot of value to this company with the work we have done. So whilst we're developing the Rover 1 development, we're also exploring the area, and I'll talk a little bit about that as well. So you're looking at the ore body, which starts at about 240 metres underground. And I just put this slide on to highlight the grade of this deposit. 30 metres at 36 grams, which is over an ounce of gold, of course. 7 metres at 4 ounces of gold. If you look on the copper now, 27 metres at 4.75% copper. And I would stress 21 metres at 7% copper. This is the same ore body. It is a very rich gold copper ore body. You're looking at the green areas, which are predominantly part of containing the copper, and the gold tends to sit in general tends to sit below the copper. In some cases, it streaks up in these fissures, and they are extremely rich, extremely high-grade pods of gold. So, as I said, this has been extremely well drilled out. You're looking here at the drill strings, over 90,000 metres, so well and truly drilled out and ready for development. In our PFS, we announced around about 2 years ago, we said we'll do 30,000 ounces of gold annual production and 7,000 tonnes of copper. As you can see, where gold and copper prices have gone, and everyone is watching this. Copper is going to be a very important part of the electrification and the net zero revolution. And obviously gold continues to climb with so much uncertainty in the world at the moment. These are 2 fantastic metals to have driving our revenue. And as I said, these 2 metals will make up over 80% of our revenue. We're also very lucky to have these byproducts. I'll talk about the two on the right first. Cobalt, you would have seen flash up to 120,000 US a tonne. That's back down now to about 35, 36,000 a tonne. The high-grade magnetite is actually the host rock for this ore body, and we'll be doing about 75,000 tonnes per annum of that. And as you can see by the slide there, it's worth about 230 US a tonne in its high-grade form that we'll be producing. You'll notice all of these metals are downstream. So we'll produce gold as a doré ready for the mint. We'll produce copper cathode, 99.75% copper, cobalt as a metal, and high-grade magnetite. So all very valuable products. A lot of attention now has turned to bismuth. And it's one of those metals that the USA, you guys, have placed as a critical mineral. And it's part of this, if you like, this trade and, well, it's a microchip war as well that's going on with China. Bismuth is a very important critical mineral. China produces 85% of the world's bismuth, and they have placed an export ban on that metal. So I'm going to talk a little bit about that metal in a minute, but this highlights, again, 5 revenue streams, and it's why that research note has got a valuation on us of $1.37, and we're trading 11 cents at the moment. So plenty of opportunity there. So now it's about, how do we increase this gold? How do we increase the copper, our annual production, and also our annual production? And this is from our pre-feasibility, the numbers you're looking at, which, as I said, came out about 2 years ago. Moving now into the bankable feasibility study, we have added, and this just happened in the last 3 weeks, 40% to our resource number, our total tonnage resource number. So that's how we're going to drive those gold and copper numbers higher. You can see we've added about 26, 27,000 ounces. That will go onto that front end of those 30,000 ounces per annum, push that up to 34, 35, and push that annual copper production, copper cathode, up over that 8,000 tonne per annum. And remember, we've got about 11 to 12 years mine life in reserves. Our bismuth is up to 9,000 tonnes total, cobalt 5,200 total, and again, that magnetite product. So how does that affect us, and how has that driven that value argument for us? We are going downstream. That is the key to our profitability and the key to this deposit. Because there are 5 different products, we will be the ones that differentiate them and then direct sell to end users. Obviously, that will attract a premium as well. And it means we don't have to export to a smelter in China or in Southeast Asia. It means we can produce these metals within our own company. So it's a very simple circuit. We crush and grind. We take a little bit of gold out through gravity gold. Obviously, that'll be the chunky stuff that you would have seen in some of those intercepts I showed earlier. All of the gold, copper, cobalt, and bismuth goes into a single bulk concentrate out on our site at the Rover 1 deposit site. There's also a magnetic separation, which takes away the high-grade magnetite. That goes up in as a separate product and goes straight to the port of Darwin on the train. As I said, the other 4 metals stay within this concentrate. We produce pure gold, or if you like, gold in a doré direct to the mint, copper in cathode, 99.75% LME grade, cobalt in a metal. And at the moment, we only have bismuth as a concentrate. And I'll talk a little bit about why that remains a concentrate at this point in time, because we are going to go downstream with this product. We're just going to do it with a partner. And we have announced that in earlier ASX announcements. So let's have a little look at bismuth and have an understanding as to why there's so much talk and I guess so much anticipation around what is happening with bismuth. China produces 85% of it. In America, you'll remember that China's placed those export controls, not just on the USA, but worldwide. And bismuth was one of the metals that was put into this export ban. And the reasons are it's very heavily used for military purposes in this Chinese, in their guided missile program. It's used in defense and aerospace, and also and you can see here, USA produces none of it. China produces about 13,000 tonnes of the 16,000 tonnes that are total global output. So there are no bismuth mines out there. Bismuth is only ever mined as a byproduct. So let's look at this 99.999% pure product. It's used in the Chinese guided missile program because it will reflect or repel magnetic fields. It is the strongest diamagnetic, or what's known as an anti-magnetic metal known to man. So if a missile is launched that has bismuth as part of the alloy in its cone, it can provide a repellent to that particular cone. So you can see why there is so much value associated with that product. One of the other reasons bismuth is so popular or so in demand is that China has announced that it has produced a bismuth oxyselenide microchip. So what we're seeing there is a new transistor or microchip that is two-dimensional and is capable of being used, obviously, it's smaller, it's easier to stack, as in silicon semiconductors being three-dimensional. And obviously, given that speed and that, if you like, so much more efficient than current technology, then you can see why China is very keen to be looking after its own bismuth. China and the USA have actually been in a bit of a chip war, and you can see why the US is very keen to get a very consistent supply of China. Sorry, I beg your pardon, of bismuth. Just a quick look at our proposed beneficiation plant design. Very simple: crush, grind, flotation here, as I mentioned, one single bulk concentrate produced at site, and then you've got low intensity magnetic separation for that magnetite product that I mentioned. As far as downstream goes, we're looking at the middle arm. It's actually a precinct fully designed for sustainable development and for the downstream processing of critical minerals. So this is in Darwin. We've been allocated land here, and we are now making this part of our bankable feasibility study. We also have options, and we've had offers from some other countries as to build this in this precinct. And we're obviously looking at those and making those part of our bankable feasibility study as well. And as I briefly mentioned, we are still running exploration in this area. The mine I've been talking about is here at Rover 1. We have 1,000 square kilometres of prospects. Each one of those black dots is a geophysical prospect undercover, similar to what Rover 1 is, the mine that we're developing. So we're using these ambient noise tomography sensors and running a brand new form of exploration. These sensors are specifically designed to look for IOCGs, basically in blind cover. So that program is underway now, and I expect to have 3 or 4 targets from that program by April or May 2026, and then we will go and drill. As I mentioned, this is our ground here. We have 1,000 square kilometres, and this is Tennant Creek, easily one of the richest gold copper fields in the world, extremely high grades, and many fortunes of some of the original families in Australia were made at Tennant Creek. So here we go. I thought I'd just leave on the independent research that we've got at Castile. Again, this is a independent, fully diluted, fully discounted research note, valuing this at $1.37, as I mentioned earlier. So that's an MPV valuation too. So as I said, fully discounted, fully diluted, and we're trading at the moment at around about 11 cents. So there's still plenty of value in the share price, I think it's fair to say. And that's basically it. So as I said, we're developing the Rover 1 mine to produce gold, downstream critical minerals, copper, bismuth and cobalt. And we are one of the few bismuth mineral resources in the world that is available to be commercialised. And we're having discussions with potential funding and strategic partners for debt and offtake financing. So we'll go to a couple of these questions. We'll go to the start there. It's good. Have we secured any committed debt or offtake financing? We're currently in negotiations now with a number of finance providers and also looking at offtake to provide some of the capital as well. Obviously, we want to avoid dilution, which is what we're doing with the work we're doing with these financiers. And naturally, the Australian government is also very keen to talk to us about debt funding, and we are talking to a branch of government for that. Okay, next one is, given the sharp repricing of critical minerals and geopolitical tensions, are you prioritising mined metals in Australia? Well, we're remaining open to 1 or 2 other countries that we've had offers from, to, as I said, to build that downstream refining. The only deal we will do will involve us keeping control of those metals. That is, we participate in the back end. We don't simply sell a concentrate and move on. What's your long-term capital market stay? ASX 02. At the moment, we're not looking beyond Australia. Obviously, if we get to the certain size where we may have a look at listing overseas. But at this point in time, we are on the OTCQB, so obviously we can be traded there. Got a question here about headcount, in-house skills, and board composition over the 5 years from now to operate the mine. As far as local skills go, we'll be using contractors for initially for the mining. As far as processing goes, there's plenty. One of the reasons we moved the processing plant to Darwin was to ensure that we would be close to a strong and available workforce, and certainly that is how we're planning to do that. From a board composition from now, I would think we will have probably a metallurgist on the board, and also potentially potentially a lawyer. So at the moment we have an engineer, a finance. I'm in finance as the executive chairman, and we have a geologist who's been associated with this project for over 10 years. Our current mine life at Rover 1 is looking at around about 11 years at this point in time. But as I said, that's not the final one. We're looking to expand that now as we speak. Yes, I've got a question here about customers, especially in defence, semiconductors and data centres. Absolutely. So we are talking to someone at the moment who we are looking to potentially partner up with to create that downstream bismuth. And we have announced this to the market that they are already selling downstream metals to the US government, and therefore they already have networks they already have distribution networks and sales networks throughout US and Europe. I've got one here about gold and critical minerals and how it may evolve over time, and ultimately may be valued more as a critical minerals play than a gold company. I would have to say not with gold doing what it's doing at the moment. Obviously, this is Eric's question is price driven, and so that would naturally be price driven. And we do see copper as having a very good run, and we don't even think the demand phase for copper has even started yet, and already that's trading around that sort of $5.20 a pound. So we are expecting big things from copper, but again with gold at the moment, you wouldn't be short gold. It just continues to take on all comers really. If there's a sell-off, it tends to just creep back up in the remaining days of trading. So really, it's yeah, as I say, that's all price driven, Eric, and we'll move with the times. And don't worry, we're keeping an eye on the cobalt as well if that pops again. But at the moment, it's the gold and the copper driving the revenue, and then I would like to think that bismuth, if we get that to a 4 nines product or a 99.99% product, that will also be a very good earner for us. Okay, well, that looks like it for questions. Hang on. I've got one to ask a question about the experience of the management team with bringing ISE projects into production. And we have a lead engineer who's worked on this project through us, who works for us now. He's on the board. He's a very experienced underground mining engineer. Project direction at the moment is being run through TIS, which is obviously a large worldwide third-party provider. And we also have 2 in-house geologists who have 10 years plus involvement with this particular deposit. And when we spun it out of Westgold, that's where all of the, if you like, the IP came from, because this was a known deposit when we listed it back in 2020. I think I've covered all the questions. So thank you very much, and thanks very much to OTC for having us. And we are available on info@castile.com.au, and happy to take any other inquiries or chat after this after the conference. So thank you very much. I'll go back to Greg and hand back to him now.